Now for a quick disclaimer. Nothing you see or hear on the flight deck is investment advice. Nothing said today is intended as investment advice. Those participating in today's discussion may have bought, held and/or sold the stocks discussed today prior to today's discussion and/or may do so afterwards. Remember, you are responsible for your own investment decisions, and if in doubt, you should seek advice from an independent financial advisor. Stocks can be high risk, and you may lose the entire amount you have invested. Please now sit back and enjoy the flight.
Hello, and welcome to episode 6 of the Flight Deck Investor Roundtable. On the call for the Flight Deck crew, we have Alaska Gasline, we have Sporozine, we have Robito and myself, Flight. But we also, on this very special episode, have David Hobbs, Executive Chairman, and Justin Hondris, SVP of Finance and International Investment for Pantheon Resources. Thanks for joining us, guys. I'm so looking forward to this conversation. And welcome, chaps. It's a real privilege to have you join us. Where are you joining us from today?
Well, first of all, Flight, delighted to be here, but deeply disappointed not to have a cool screen name avatar rather than having to live under our own names. I'm joining from Houston in Texas,
and I'm joining from cold London.
Oh, guys, it's so good to have you, and thank you so much for responding to our invitation. We're stoked. So, just to give a quick overview of what we want to run with today, we've got 3 sections. We want to, of course, cover Megrez. We want to cover the gas line, and we'd like to cover just market dynamics as well. We're going to ask Alaska Gasline, first of all, to kick off with Megrez. Then we'll move to Sporozine, who'll handle the pipeline, and then I'll run with the next steps. And Robito is going to interject and interrupt us with any other questions that he feels he wants to chip in with. So thank you, gentlemen. Let's kick off. For those new to the Pantheon Resources story, and perhaps new to Flight's investment server and our channel, the Flight Deck, could you give us an overview of the current resource position in terms of what you've discovered?
Absolutely. We have around 1.6 billion barrels of recoverable oil independently validated by Netherlands Sewell, Corley Gillespie, Lee Keeling and Associates, and more than 6 trillion cubic feet of gas. That's in 2 fields. The Kodiak field, covering about 170,000 acres, 1.2 billion barrels out of that 1.6 in round numbers. That's a slightly deeper basin floor fan, giant basin floor fan. The remainder in the western half of Apun, 68,000 acres, between the top sets and Alkade zone, around 370 odd million barrels, a little over 1 trillion cubic feet of natural gas. Then on top of that, and that's what we've been moving forward with development planning and starting the environmental consent process. On top of that, we had 2 major initiatives during the course of 2024. One was drilling the Megrez well. We spudded that in November. We announced preliminary results. We found just over 1,200 vertical feet of vertical depth of oil column that we'll be evaluating. And right now we've got core results coming in draft form and cuttings analysis, etc. So as soon as we've got that, we'll be announcing that. But that's a fantastic result when compared to the pre-drill expectation. In addition, we were looking to move forward with the commercialization of the natural gas. And you'll remember that we signed an agreement with AGDC halfway through last year that would potentially commercialize up to 500 million cubic feet per day. And that would provide funding capacity that would be less dilutive in terms of our overall capital. And that's moved forward significantly in the last couple of weeks, with Glenfarne negotiating their exclusivity agreement with AGDC to move the whole of the Alaska LNG project forward. Of particular interest to us, of course, is phase 1, the pipeline.
Great, thanks, David. And to you, Justin, what's the current liquidity position of the company?
So, Flight, we raised money in the summer of 2024. We raised $29 million, and that was to be applied towards the drilling of Megrez and the subsequent testing of Megrez. And as you're aware, we're awaiting our core results for Megrez, and we'll therefore define the testing program. So that's all funded. We're in good shape for that. We also announced that the appointment of two US investment banks to lead the charge, pursuing the ultimate US IPO for the company further down the track, but in the short term to address the pre-IPO funding element. And by that, I mean non-equity sources, things like farm outs, joint ventures. And we're in a very fortunate position having 100% of each of our project areas with such large resource bases that we can make a deal that would work with whatever size counterparty we come across. We have a great amount of flexibility there. So Flight, that gives us great optionality.
Yeah, absolutely. Optionality is really vital.
Yeah.
Thanks for that. I'm going to hand over to Alaska GFIS.
Well, thank you, Flight. I'm going to talk mostly to David, I think, but Justin, feel free to chime in if you'd like. And we'd like to talk about the Megrez prospect, a bit on the drilling operations, then maybe a little bit on the plan for future well testing, and lastly, if there's any ideas on where this leads you to the future. But I know David can't answer a lot of things without an RNS and the proper approval prior to some new facts coming out. So I'd like to treat this a little bit differently. Just pretend we're two sports announcers. I'll be the guy up in the box who kind of tells you a little general information. And then David will be the color commentary person on the field. He actually was in there with the excitement going on, and he can talk about whatever he wants to talk about. And I'll kind of work our way down through the well, and we'll touch on some of the questions that people had that came up.
I was rather hoping to be Tony Romo up in the box where it's warm and there's a drink. But anyway, that's
we can switch roles, but I don't have all the. So, anyways, again, it's an exciting well, and again, we'll get a chance to say, what was it like when you went into the Prince Creek Formation, unexpected reservoir with hydrocarbon pay. But first, let me give you a little story about Megrez. Again, as old exploration manager at Great Bear Petroleum, I had the honor to actually interpret some of that years ago, and it's a really good-looking prospect. The nice thing is you don't find too many what they call giant fields anymore, 500 million barrels or bigger, and this has potential to be that or even better. But it's a 609 million barrel recoverable resource prospect as per what Pantheon's announced, 69% chance of success. And it's got three primary targets, tops at 1, 3, and 9, which are shelf edge margin deltas. The other exciting thing is this is shallower, less Dmax, depth of maximum burial, and we're going to know if we've got better porosities and permeabilities, which has been suggested already. So the pre-well plan suggested sort of 75 to 125 foot thick sands based on the seismic amplitude versus offset, 5 to 35 millidarcy permeability, and sort of greater than 20 to 25% porosity, which is all better than some of the stuff we've seen to date at Alpoon and Kodiak. So let's start off with drilling the well. It's spud anywhere between November 8th and 11th. There's a little question about the actual spud date. But we went down, we drilled 3,500 foot to get the first surface casing set. And there we then built angle and basically drill a tangent angle of about 52, 51 degrees. And we're going for topset number 1. And the plan was originally drill maybe 2 or 3 core intervals. And normally in a coursing upward sequence, we'd be looking at the top of the sequence for where the best sands are. So we're drilling down. We get to about 6,300 foot measure depth. And all of a sudden, we get a big surprise. David and the team are probably looking at their Interact display from Schlumberger SLB. And all of a sudden, the gas readings go up. We're getting some cuttings coming up that look encouraging. And we're drilling with oil-based mud, so people are probably scratching their heads a little bit. Is that going to dilute the fact of what we're seeing, or is that actually irrelevant? So take it away, David.
Well, look, drilling with oil-based mud was a decision in order to make sure we had the highest quality wellbore. It's quite a deviated well. We wanted to make absolutely sure that we had the best chance of a trouble-free operation. And kudos to Tony Beilman and Jay Cheatham and the rest of the team that we resulted in as clean an operation as anyone could hope for. Undoubtedly, within the parameters we set for ourselves in terms of both time and cost. So there's obviously a lot of excitement watching as we go down, the whole way down the well, and certainly delight at finding that we were finding more than we expected in terms of hydrocarbon bearing zones. You've got the LWD, you've got the gas chromatograph, you've got ultimately then the wireline logs when you get to the bottom, all of which are pointing at, we've found not only most of what we expected in terms of top sets 1 and 3, question mark whether we drilled through where top set 9 would have been or that we never got to it, but for sure we didn't find anything that looked like we were expecting in top set 9. But in addition, more column. And so, we as soon as we've got decent logs and an interpretation that we can rely on, at least for a preliminary announcement, 1,200 vertical feet. Not all of that is net pay. Obviously, the net pay is different. For those who attempted to take the cartoon and measure it to calculate net pay, I'm sorry, it was genuinely a cartoon drawn by freehand without any reference to what the actual formations were. It was intended to show that there was interbedded sands coarsening from the top, interbedded with shale in four distinct zones from the Upper Prince Creek down. I'm going to, so top set 1 and top set 3, they're in the Upper Schrader Bluff, which is the next unit in the Schrader Bluff up from the Middle Schrader Bluff, which is where the Uphoon West top sets are. And then on top of that, the Prince Creek, that's a happy surprise. So where are we now? We've got cuttings analysis being done by HS Baker Hughes. They'll have the samples that were sealed at the wellbore and the ones that were not sealed. And of course, the ones that are sealed at the well site, they've kept everything in that was in there by the time the cuttings got to surface, whereas the ones that weren't pressure sealed will have lost most of what was in the pore space by the time it gets to the lab. If it's high permeability and if it's very tight, then it'll probably... So when that analysis arrives with us, one of the key things we'll be looking at is there a big difference between the sealed at wellbore and the unsealed? Because the greater the difference there, the better the indication of permeability. So bated breath in that regard. The cores have made it back to Core Lab. They're doing the work both on the whole core that we took in the well, and also the 49. We recovered 49 of the 50 sidewall cores that we took. So they'll be doing all of that work, and we're expecting porosity and permeability in that over the course of the next few weeks. As we said, it'll be almost certainly to the end of January, maybe a little longer before we get the results. But you can imagine you want to get the right results, properly done rather than rushing it, because you don't get a second shot. If you open a sealed sample and you screw it up, that's it. It's gone. So everyone's working carefully but expeditiously, and we'll be able to determine what the test intervals are once we've got all of that data. But what's great is that initial result is bigger than we expected in terms of the column over which we anticipated finding movable hydrocarbon.
Well, that's all great. And I do have a little question on the coring, the full core. Normally, we'd be looking at things like drilling break. We'd circulate up some cuttings, see what the content of hydrocarbons are. We'd look at the first part of the LWD log, getting into the top of, say, top set 3. Since we didn't do top set 3 and we only did the full core at the bottom of top set 3, any way to expand on that? Would we just not ready to do the coring, or we didn't see what we thought was the stuff we wanted to core, or again, what's the story there?
I think that it'll become clearer once we've done the full analysis. There was a lot about what we were encountering in the well that was recalibrating on the fly and trying to work out what is the optimum balance between spending time and spending money and gaining information. We ended up making a decision that we'd take just the 160-foot core. You saw the video with Jay and the American coring. That was obviously delayed until after we'd made the announcement. Otherwise, that would probably have been revealing more than it would have been a tip-off. But so it was a decision based on all of the information that we were receiving on the well, knowing that we had the sidewall core available to us. So we ended up taking one core.
One question I guess I couldn't find in the literature or webinars, but the planned TD, based on a figure, it looked like it was around 10,800 foot measured depth. And that's just eyeballing it off of just a figure of a seismic line and a well bore in the seismic line. Did you guys ever talk about what TD was and what the actual TD is?
We TD'd once we came to the conclusion that we probably weren't going to find the lowest top set that would have been on that well track.
Okay, that's fine. And the other one is the seismic. Obviously, E-Size and people like Jerry Nichols, they've looked at the seismic. You not only have the thickness you're predicting, but the areal extent and the depositional environment. So, all good with finding hydrocarbons, apparently light oil, again, permeabilities and porosities in the range what we're talking about. But the question, I guess, is you go back and now you've got to look at this from two standpoints. One is the volumetrics to come back and say, is it 609 million barrels recoverable resource, or is it bigger or smaller? My guess is it's going to be bigger. Then the second thing is, how far do these things extend? And the ones that we didn't hit, did you learn something about those? So there's tops at 2, 5, 6, 7, 8. What do those look like? And did you get any indications from from the drilling to help validate where the seismic goes from now on?
Well, look, as a fourth child, I'm used to number 4 being missed out from the list. So I'll let that one slide. We learned a heck of a lot about the overall section in terms of, have we got to the point where we know enough to be starting to remap? The answer is there's ongoing work. You can imagine you dump a pile of data onto people, and you're sorting through to prioritize the things that deliver the highest value information the quickest. And the good news is that whatever oil's down there, it ain't going anywhere for the time being. And so trying to determine the volume is probably not the first order of business. Our real focus here is on choosing the perforation intervals, looking at what needs to be tested individually, what can be combined. If you've got sand bodies coming and going, are you going to combine a few hundred feet? Are you looking at smaller test intervals, etc.? So it's really trying to work out what is the optimum in terms of information versus cost to make sure that we get the highest information value return on capital investment in the test program. That's 100% our focus right now.
Okay, so it's not necessarily bottoms up testing program. It's not necessarily test the best zone first, and then that's it. But it's going to be a well thought out process. Some of the folks have asked me stuff which, again, you may not be able to share, but do you have an expectation what a well rate from this type of rock is going to give with the light oil? And or if you don't have that, can you kind of at least guide us what success or failure kind of looks like from a testing program at this point?
Well, I think there are a couple of points to make there. One is that inevitably you're going to test from the bottom up, and if you don't test a zone and you've moved up above it, then operationally it's very hard to come back to it in due course. So it's again, we're not going to run a 90-day test on every zone, so you have to choose where your shots are and what you're trying to prove with each test. And so that's why I'm going to struggle to tell you what to expect in terms of test rate, because if one of the zones, the objective was simply to recover the most representative sample, you would do the slowest possible flow in order to try and recover what is most representative of in situ, without having to go to trying to recombine and recalculate what the in situ was from the products that came to surface. If I were to tell you, we expect X barrels per day on average from each 100 feet, but then what we reported was we flowed this particular zone at a tenth of X because we were trying to limit the drawdown. Is that really going to be helpful in terms of expectation setting? So that's why I'm I'll commit to you that we will share our expectations of the test program once the test program is designed. But today, we just don't have enough certainty because there's so much analysis of the quality of the different zones going on that I couldn't set an expectation today that would be meaningful or not overtaken by events in due course.
Okay, thank you. And this is kind of we're getting near the end of my questions. Justin or David, potentially for flow rate testing, we can do it with an exploration test, limited nitrogen, perf, and then flow, or we could bring in a full testing kit like we have at Alkaid number 2. With the money that we have planned for this well, which again, I'm not sure what's included for testing and what's not, would this require bringing the Alkaid 2 facilities down here or something similar?
So the testing will be done with rented kit brought specially for this test. It's the facility at the Alkaid 2 pad is a very sophisticated automated control system, and that probably means that you wouldn't move it unless you were doing it for the long term. And so for the sort of type of testing we're anticipating doing here, we'll have a testing spread on day rate.
And for Justin, the cost of the well plan versus actual, and/or is the testing included in the money that's been raised, or is this going to require a little additional fundraising?
Yeah, look, it depends on the extent of testing, but absolutely, when we raised our money back in summer, we raised we raised an amount of money to drill the well, and with additionals over our minimum amount that would go towards funding. And so we certainly have enough money to get going with testing, and we certainly have enough money to get going with those efforts.
And in fact, just for clarity, we spent a little bit less on the drilling phase of the thing, so there's a little bit of extra money available. And as you can imagine, given the bonus of the Prince Creek, we're grateful that we saved a little bit on the drilling in order to have a little bit extra for testing.
Okay, great. And the last thing is the lease sale recently and the plans for future appraisal wells. Any thoughts about, being able to release data like you'd like to do versus, well, now we have value from data and seismic and potentially trade with whoever, Surprise Valley Resources, I think. And so anyways, any thoughts on those two topics?
Well, there's two different things here. The first is, as soon as we have certainty over the information, we're going to have to release that. But that will be the interpretation of the data. We will abide by our disclosure obligations. In terms of will we probably show detailed logs, etc., in the way we have historically, that information almost certainly has some commercial value, and so you won't be surprised to hear that we are not intending to provide as much detailed technical information as may have been in the past, specifically because of its commercial value to the company. As to Surprise Valley, we are delighted to see other people showing interest. You'll notice we leased as far as we think you can commercially reach from the west side of the road. If someone sees enough value that they think coming down the east side of the Sag River and drilling wells and ultimately trying to develop over there, that can only be an endorsement of the perceived value of what we've got. And in a dream scenario, if we've got something that filled the entirety of the new acreage we acquired and what they just acquired, then isn't that good for everybody and good for Alaska?
Well, thank you. I'll round up my session here with saying, personally, I think you've discovered a giant oil field. And again, I look forward to additional data, the well test, and then maybe a future appraisal well. Thank you, David and Justin.
Well, no, thanks very much indeed. And as you saw from our announcement, we're delighted with what we've found so far.
David, if I could just ask, we've kind of touched on it, and there's more data to come, as you pointed out, towards the end of the month. But in terms of reservoir quality, we talked about seeing porosities up to 20%. So is it fair to say that's in line with what we were expecting? We were expecting improved quality compared to, obviously, to Poon West, but is it fair to say that, or too early?
No, it's exactly as we said. We found large portions of the sands that were encountered exhibited porosities in line with expectation. You're certainly not hearing the voice of disappointment vis-a-vis reservoir quality.
Okay, thank you.
Okay, great. Well, thanks, guys. We're going to move on and cover the gas pipeline. So I'm going to hand over to Sporzine.
Thank you, Fly. Justin, David, what a 2.5 years it's been. I'd say we've had a lot of ups and downs as a company, and I think I'd agree with Bob. Actually, I think he made a comment on one of the recent interviews that we're in a better shape than we've ever been as a company. I would agree with that. I don't think the valuation of the company really reflects the progress that we've made over the last couple of years. And obviously, from my point of view, I want to thank everybody involved at Pantheon for all the effort. It's been pretty tough going at times as a shareholder. I'm sure it's been pretty tough going for you guys as well. A lot has been said and written about the last couple of years, but I think 2025 is potentially going to be a really great year for us. And I look forward to that with a lot of enthusiasm. Also, thanks to everybody on the Discord server who's put questions in. We've had a lot of questions on the gas line, as you can imagine, just given what's been going on here over the course of the last couple of weeks. But I wanted to sort of start out really and take you back to how this all really came about. So, I mean, looking at, as I've done quite a bit over the course of the last 6 months or so, looking at some of the collateral that the AGDC have put out, it's only recently really that they've decided to adopt a two-phased approach to the project. And I think as late as December 2023, they were still talking about the full LNG project as the way that they wanted to execute this program of work. And I think I'm really interested to know really how this all came about. How do we get engaged with Frank and the team? Was this, did we make the run-in? Did they come to us? What was the sort of genesis of what I think looks like a really great relationship now, actually?
A lot of people have put in a lot of work. Firstly, thank you for recognizing that.
Yes.
And I can only claim any credit for the last 18 months, and even then only a small share of the credit because a lot of people have contributed to it. The previous year, as you say, it had some ups and downs, but when you look back and see what was achieved and the data that was gathered, that will also be shown to have been, in the overall long term, to be seen as a very positive episode in the company's history. In terms of the relationship with AGDC, the AGDC recognized that there might be some gas they hadn't yet accounted for. They approached us and asked us, do you guys actually have any gas, and is it going to be economically viable to produce? And we got talking. It happens that there were some historical personal relationships that meant that initial contact could be made, and a conversation begin from a position of trust in any case. So over the course of 6 months, because contact was made in late July of 2023, and so a lot of conversations about how things might develop in a way that could potentially lead to the ability to break the project into a phase 1 and phase 2. And you can imagine that trying to persuade $45 billion to show up in one room all at the same time with different stakeholders with very different economic drivers and commercial imperatives would be unlikely to happen. And as Governor Dunleavy said the other day, until very recently, he wouldn't have believed it was possible to get it done. But now it is. And I think credit to the AGDC folks that they were able to broaden their view of the scope of the project to breaking it into those two phases, and that with the requirement to compete against imported LNG that would arise as a result of the inevitable decline of availability from the Cook Inlet, that Pantheon, if we could provide the gas at an appropriate price and on appropriate terms, could be what unlocked the ability to break it into two parts. And that is really what unlocked the ability for the state of Alaska to redouble their effort to proceed with phase 1. And as you, I can't remember, it may be in Flight who first worked out that this could only happen if you had pipeline specification gas, and put two and two together and flushed out so that we had to put out that announcement in, Justin, was it March? I think
it was March.
Yeah.
For the record, apologies for that. I think I was sent a link to the. I remember it distinctly. I was sent a link to the presentation that was put out, and I was actually sat watching it and just had this light bulb moment of there's only one potential answer to that position. So anyway,
annoyingly,
the danger is when you get something right, then people tend to then hang on to your every word. And I keep saying on the flight deck that please don't. Mine's just an unqualified opinion, and but we follow it with much interest. So
and look, the annoyingly, it probably wasn't the only answer on the basis that Point Thompson gas doesn't have as much CO2, but nonetheless, once the market reacted, and Justin, I think you were the one who got the call asking, is there any reason why our share price would be as volatile as it is, and finding ourselves having to put out that announcement. But anyway, it had a very positive effect in the sense that it helped drive us to the signing of the gas sales precedent agreement in June. And that really provided the underpinning, subject to technical due diligence, etc., to get this to move forward. But as I say, this is something that has had the positive effort of a number of people, both from the Great Bear Pantheon perspective and within the state, and also as you've most recently seen, Glenfarne stepping in as on an exclusivity agreement to be the project development lead for the overall project.
Right, and we've had a couple of questions about Glenfarne. I'll come to that shortly if I can. But I think just from my point of view, the speed at which this has moved, when you kind of look back from here, it's actually moved pretty quickly. So I would say, and just generally for projects of this size, but if you look at it in the context of this initiative has been going on for probably a decade, and the amount of progress that I think has been made in the last year, I would say has been pretty rapid, really, from the initial announcement of our involvement. I appreciate we're talking to them a lot, before March, but from March, the initial announcement came through. We had the gas sales precedent agreement in June, and then, more recently, we've had actually the confirmation of the feedback stop. The letter of credit was confirmed, and obviously last week or at the start of this week, we saw the Facebook press conference from Mike Dunleavy, and then obviously Glenfarne coming in. So, I mean, I don't think this could have played out any better for us as shareholders, right?
It's certainly been a key part of our funding strategy. You'll remember we talked last year about how do we deploy assets outside of the core oil. Let's not forget there's 1.6 billion barrels of attractively economically developable oil, and then there are other assets, including, as it turns out, the natural gas resource. And the potential for commercialization of helium is a lovely little kicker to add on top of that. And at the same time, there were opportunities to look at whether or not you could do deals that would provide access to development funding in return for less equity dilution than would be the case if you simply raised equity against the assets. And those conversations can go on forever if you don't find some kind of forcing function. And that's the reason we talked about having deadlines for making a choice on the path we were going to go forward and then following that path doggedly. And that's what drove us ultimately to getting the gas sales precedent agreement signed in June, and now committing that our main strategy for realizing the least dilutive of value path to commercialization was going to lie in that area. And then once you've made your choice about what you're driving, there's no point in holding back. So over the next 6 months, we worked closely with all the different stakeholders to get to a point where, as you saw, announcements being made at the state level. Governor Dunleavy, if you go to his Facebook page, it's not that it was unique that it was a Facebook conference. That's how he manages his press conferences. But all of these different people And you've got to remember, Great Bear Pantheon, as the operating entity in Alaska is called, has been a part of Alaska for more than a decade. It's terribly important that we remember that it's not all about us. It's about the success of the project for all the stakeholders in Alaska. And so our focus is really on just being a good team player with the people who are driving this process forward, and we're part of that group, and we'll continue to do so. We want this to be a success because we're going to be in Alaska for decades going forward. We're going to be an important part of the energy security and part of the fiscal security of Alaska for the long term, and we're absolutely committed to playing that role. And that means remembering that we're just a part of it, not the whole story.
In-flight announcement. Flight's investment server, sharing industry insights for the good of all. If you'd like to be part of our investor community, and for more information about the topics discussed today, download the Discord app to your phone or computer, then use the invitation link to join, which you can find below.
I did want to ask you both, actually. I think as a Pantheon shareholder, there's been some moments in the history of being in the company which I don't think I'll ever forget. I would say the first Roger Young presentation in the webinar, when, talking about light bulb moments that Flight mentioned before, the first webinar where he said, you've actually got to stand back to see how big this thing is. I don't think I'll ever sort of forget that statement. The light bulb definitely went on for me at that point. And
yeah,
I think we've had another one recently, and when shortly after Trump won and he released the video that mentioned the gas line, I was certainly expecting some momentum to gather after his election victory if he was going to be victorious. But obviously, for him to release the video so soon afterwards and reference the gas line, I was pretty happy, and I don't think I'm ever going to forget that. And what was your reaction to Trump's video? Did you know it was coming, and were you as happy and excited as I was?
I think that the president-elect, you've got to remember, was when president previously had been a great fan of resource development in Alaska. In any case, so progress was made towards the commercialization of the North Slope gas resources under his first presidency. The Biden-Harris administration in the intervening 4 years, in fact, created some very positive momentum, not least in terms of expanding the scope of potential federal loan guarantees to incorporate something other than a pipeline that Deck-FIS will remember was going to go all the way to Chicago if we go back 15 years. And the original legislation governing the guarantees required that gas to arrive in the lower 48. So the last administration, or the end of, we're still in that administration for now, but they had helped push the project forward by incorporating into the guarantees an LNG export project and including all its different components. So it was great to hear that it was an early priority. I can't say that we were surprised, given that his previous administration had been similarly enthusiastic about it, but undoubtedly it helped provide impetus when that was added to the arrival of the Wood-Mackenzie report, demonstrating not only was it a good project in its own right, but that it was a better project for the state of Alaska than any of the alternatives to be considered. And then you think about the activity of the ADA board agreeing to provide the financial support. All the different pieces, they build off each other's momentum, and it was great that we're part of that group trying to drive it forward. But as I said before, I'm not going to claim any special credit for Pantheon because it required every single member of the ecosystem to be pushing in the same direction. And credit to Frank Richards and his team at AGDC. They have done an excellent job of making sure there's a shared vision of how this might move forward. And here we are today, further forward than this project has been for a great many years.
Mm.
And I think people actually forget how big this thing is when it finally gets built. Certainly the LNG portion of 20 ton per annum is probably, if it was built today, it would be one of the top 3 or 4 in terms of size in the US. So it's a huge effort.
Yeah, 20 million tons per annum is it's not chopped liver.
Yeah, absolutely. Now, just shifting gears a little bit, we've had quite a lot of questions that have come in around the FID of the phase one project and how it doesn't appear to be completely aligned with our FID at Ahpun. And I just wondered if you could maybe talk a little bit about how you see those two things potentially coming together, because I guess it's pretty hard to understand a scenario where the phase one gas line pipeline would achieve FID and we wouldn't.
I think you've got to think about what you mean by FID, because by definition, FID is your commitment to move forward with the development. But if you think about it in the context of house building, and Flight can probably relate to this, that there are occasions when you start digging the foundations before you have all of the permits necessary. You may not have had the in America, it would be the fire department approval of where the electrical outlets are. These are things where there are always approvals required after you've begun work, but they are what I describe as normal course of business, inevitable approvals if you follow the rules and the guidelines. And so I can see a situation in which there is an ability to provide sufficient certainty for the financing institutions behind the major capital investment, including, of course, loans guaranteed by the federal loan guarantees, that there is an absolute certainty that the project is going to go ahead in some form, and that it has an adequate cascade of fallback options in the event that option A doesn't come to pass. Look, there are no circumstances in which a properly thought through and properly submitted and requested environmental impact statement wouldn't be granted. If we think about the advantages compared to other projects that have had those kinds of consents, we have a smaller footprint in terms of a surface footprint. The liquids we're going to be producing already twice in the case of Willow and Pica, the assessment of the net greenhouse gas emissions impact has been demonstrated that ANS crude results in a lower refinery emissions than the imported crude that it displaces. So you can get to a point at which it's not so much is FID going to occur on the same day as can you get to a point at which the degree of certainty of the ability to prosecute the project is sufficient to allow finance to begin. And so I think people may be too hung up on trying to parse what does FID mean, whereas in the vernacular, FID is reaching a state of sufficient certainty that capital can be deployed to begin executing the project.
And I think probably a lot of these questions have come from basically comparing our collateral in our presentation, which effectively shows an overrun to the EIS going quite a ways beyond the AGDC material. But if you take the over and out, there's kind of we're actually going to complete the EIS before they complete their financing. So I think there's not as much in it as maybe people are reading into.
We were really planning from a perspective of when do we have to have gas in the volumes required available, and making sure that matches, rather than trying to synchronize from the start of the project. You're trying to arrive at the end point at the same time. And then there are some places in, along the path where you need to be aligned sufficient for whatever action needs to be taken.
And in terms of, we got quite a few questions about the financing, and I appreciate that you probably can't talk about specifics, but maybe this might be a question for you, Justin, but in terms of some of the kind of like core dependencies that we'll need to have cleared out before we can start to get really serious on putting the financing in place. I guess from a timing point of view, is that going to be more sort of a 2026 activity than it is later in 2025? And what will be some of the sort of core dependencies that we need to have completed before we got into some of those discussions?
I suppose Good question. Financing is something we think about every day, and we've got an enormous project, 1.6 billion barrels of resource excluding Megrez, which we know is we're internally estimating at about another 600 million. So we've always got to think about the question of financing. So it's not a one-time financing strategy. We're running multiple strategies in parallel, and I think we continue to do that. So in terms of the deliverabilities, we're working as hard as we can. Obviously, it's about minimizing risk, delivering data to support that. I mean, typically debt funding wants to be in a position where you're in production, or at least in a great deal of confidence you're coming towards production. So as we've mentioned in our RNSs and most recently in the annual report, we have recruited 2 US investment banks to help us in the funding process, partially towards supporting us through this IPO initiative that we've been talking about, but also in assessing pre-IPO funding. I mean, we're in a very fortunate position. It's been hard because we're funding such a big project at 100% level, but we have 100% of everything. So it gives us freedom in terms of how we fund these things. It's not just equity. We can pursue debt probably a little bit further down the track, but we can seek partnerships. We can seek joint ventures or working interests or whatever. We have a number of different options on our table. So we're running them in parallel. We really do have a blank bit of paper. Yeah, David, was there anything you wanted to add to that?
No, I think you nailed it. That we are looking at listing onto a senior US stock exchange, because if we're going to be a key part of the Alaskan energy ecosystem, for the next several decades, we need to be an American, and I dare say an Alaskan oil and gas company. The first step is to make sure there is a greater sense of ownership of the future success in the United States. We're working with advisors on raising capital ahead of listing to a senior exchange, such that then it's a question of option whether or not we choose to raise a lot or a little at that point. But actually, Justin, now you've raised the question of the US listing. I know that again, based on I'm sure you have the same email inbox that I sometimes see about people worried about what's going to happen if are my American shares, or am I going to lose my UK shares, or whatever it may be. Look, nobody is going to be disenfranchised by a US listing. There is no plan for us not to have a UK listing at the same time as a US listing until such time as it is in the company's and all shareholders' interest to have one or the other. And the truth is, the market will tell us where the liquidity and where the volume is. I know that I own my shares through the AIM-listed vehicle and in some tax-efficient vehicles, and I know Justin owns shares in that way. We're 100% aligned with shareholders about not doing something with the listing that is going to disadvantage them, because we're in the same boat.
And actually, just adding to your question, Sporazine, you'd asked about milestones or deliverables and how that may impact timing. What I would say is what we're seeing in the company at the moment, I think, is all helping towards that cause. All of this news flow and the advancement we're seeing in the Alaska LNG, the pipeline initiatives, this is all positive stuff. If these things do proceed successfully, obviously it supports us commercially. But secondly, it's really increased our profile. When in terms of accessing greater investment community, let's face it, we're an oil and gas company, and oil and gas companies haven't been the easiest companies to secure funding for at all times, given the sort of the adverse move away from fossil fuels and so on. But with these initiatives that are going on, it's creating an awareness. So, when we go and meet that new institution, they've heard about this, they're familiar with it. We're potentially the largest player active in these pipeline discussions at the moment from a supply point of view. And I think that really helps the cause to secure those additional institutional and other investors as we move ahead. So I think that's important. And quite separately, in terms of the Megrez, well, all of our initial planning, as we'd always spoken about our modelling, didn't talk about Megrez. That was all on top. So if Megrez is successful and we can demonstrate reservoir deliverability and those kinds of things, again, it creates an awareness of our story, not only in the investment community, but in industry. And I think it's really important. And we know how these things are. Investment community, we're all shareholders in a public company and seek financial returns. Okay, David and I work in that company as a side, but when things become in vogue, there's a real thematic push, and enormous volumes of money can flow. We've seen uranium being in vogue and out of vogue, and gold in vogue, or helium, whatever the asset class is. I can see a situation where if we do have success on some of these things, we will start to get some real updraft in terms of the stock price, and that will assist in those financing needs.
The kind of news flow around the Gasline project has been sort of amazing over the course of the last couple of months, really. And I mean, has that helped you in terms of, you mentioned that you'd appointed advisors. Have you found that those conversations and getting access to people has been a lot easier as a result of the progress that's been made up on the Gasline project?
Undoubtedly, that's the case. But what I'd say is, that when you've got activity, it's much easier to go and knock on doors. We've spent a lot of time this year doing the basic plumbing, in consolidating the gains of the last couple of years, and putting ourselves in a position where we knew when we would expect to have something to say. And that's the point at which you start to go and talk to people, and you say to them, look out for news in these areas, whether it is the drilling of Megrez, whether it's developments on the gas line. And then those developments happen, and then you can go back to them and say, look, we told you to expect it. So it's part of a deliberate strategy, and Justin is leading the work with MZ and Blythe. I don't know, Justin, if you want to quickly talk a little bit about process there, but I think it's going pretty well.
Yeah. So look, I mean, slightly leading, I think it's a really important concept. Daily, I get questions about the stock price and attracting greater institutional investment and so on and so forth. And I think it's really important as a company. David mentioned, the last 2 years. I mean, those 2 years are very important because a little over 2 years ago, we drilled and tested the Alkaid well, and we had a result which was a surprise to us and considered as a massive disappointment by the market. It produced a lot of gas. Of course, that's now, we've had that independently assessed, and actually it turns out the result, in fact, was not so bad at all. And in fact, we had the same expert group that had given us a resource statement on that before we drilled the well come in 3 or 4 months ago, I guess, David, and actually the resource assessment actually went up. Only a small amount. I mean, remember, Alkaid's only less than 5% of our total resource base, but the resource estimate went up. And so that last 2 years, we've had very little activity. We drilled Alkaid. We suffered the hangover from that well and a lot of uncertainty and so on. Stock price was difficult. It was a difficult time for small cap. But in the last 4 or 5 months, we've been coming into the Megrez well. We've had a lot of news about the gas pipeline. That has given us the perfect opportunity to get out there and tell our story. So in order to do that, we hired MZ Group in the US to support Blythe in the UK. I mean, we had to look inwardly, and we're very, very blunt. We recognised that penetration into the US was our weakness and something we needed to work on, and so we hired MZ Group. I've got to say, my experience with them has been really fantastic. They're really energetic and enthusiastic, but they don't get your meetings the very next day. It's a process. Let's look at ourselves. Let's refine the story. Let's identify our target audience and refine the story. Simplify the story. Let's rewrite the website. Let's rewrite our investor slide decks to make it, because one of their observations was that our story was a bit too complicated for the average person to understand. So let's try and simplify that down. And you will have seen that coming through as a theme over the last couple of months. We're consistently we've got rid of a lot of the old presentations and things off our website so that people can focus on the new, most modern one with the streamlined terminology that we're using. We previously had a bunch of different project names. We had, we were referring to the shelf margin deltaic and the slope fans and all these kinds of things. We've changed that nomenclature. So we're trying to be consistent and simplify that message down. So we hired them maybe 3 or 4 months ago, I think. We've done a number of one-on-one meetings with introductions that they've made. We've done a number of conferences, and that the rollout of those conferences is increasing going forward. So we've got a number of those coming up and that's important because for the most part, it is a new audience. And what better time to address that audience when they're reading about these Alaskan pipeline initiatives in the newspaper? And, hopefully the president-elect comes in and makes some more statements about that when he comes on, later on this month. So the timing is perfect. And I know from my previous career in investment banking, it's difficult. Every company wants to get in front of institutions. And if you've got nothing to say, it's difficult to get in there. And even if you do get in there, they're not going to see you next time if you wasted their time. They want to know, they want catalysts, because whilst institutional investors, this is the oxymoron, talk about being long-term investors, they're all assessed on short-term performance, right? So they want to know what the catalysts are, what the short-term news flow is going to be, then what the medium-term news flow is going to be, how they can drive a share price uplift. Otherwise, they'll buy it tomorrow or next week or next month. So this is a good time for us to tell the story because there's a lot of news flow coming up in terms of the well, the gas line and so on. So it really is in trying to attract that new institutional base, I think that's important. I touched upon another point before, and that is that over the last 15 plus years, particularly in the US, the US institutional investment community have almost exclusively focused on either the large caps or on the shale plays with one consistent theme. They're all cash flow generating. There's been little appetite for pre-cash flow or pre-cash flow companies, and we are a pre-cash flow company. We've got enormous growth potential. We talk about chasing a target of $5 to $10 barrel of value. We're trading at 25 cents or thereabouts today. That's 1/20th of the low end of our range. And the reason for that is because we haven't yet attracted that institutional investment. And so for me, the question is, what are the critical points we need to do to just bring that balance over where we start to get institutions dipping their toe in and taking a position, and then I think the floodgates will open up and we'll get some real momentum coming into the stock in terms of new investment. One of the best things we can do is to demonstrate our ability to get to cash flow, because that, whether we like it or not, that is a key criteria for a large part of the investment community investing in E&P stocks in the US.
And I'd just add to that the combination of Justin's deep market expertise, maybe not as extensive in the United States as in the UK and Australia and elsewhere, coupled with the investor relations advisors, with the investment banking advisors, with our broker, and I'm delighted that now that we've got more of a story to tell, our brokers are better able to support the telling of that. It's not like we don't have some pretty good advice and execution capability now assembled, and like everything we've been trying to do over the last year, we're trying to institutionalize this. This is a team effort. It's not an individual effort, and we succeed if we manage to align everyone pointing in the same direction.
Great. I've got two more questions. I'll try to be as brief as possible. I appreciate we could probably talk about Pantheon and the story the whole night, really, but
Sporazine, well, that's fine. You've only got two, but I've just ticked off most of my questions have just been answered in my section. So, so you just take it away. It's the Sporazine show and the David and Justin show. So go for it.
All right, David, you talked about helium. Is there any more news to share on the size of what we have on helium, or when we might get some more information on helium?
Well, so first thing to remember is the data relating to helium, which we released earlier in the year, showing concentrations measured in the Theta West well between 0.5% and 2%. We're only expecting helium in the Kodiak field. And so there's no update in the sense of the quantities, concentrations, whatever. We'll only know more when we drill a Kodiak appraisal well, which is certainly something that we're looking at strategies for getting wells drilled. Not going to happen this winter, and Kodiak's far enough west, it's got to be a winter well. So the earliest it will happen will be the first quarter of 2026. But the other thing, of course, is that at the time Alaska became a state, helium was a strategic resource that belonged to the American government. Whether you found it on private land or anywhere else, you were obliged to send it to the Strategic Helium Reserve. So helium was explicitly not included in leases in Alaska because the standard form lease, based on then federal leases, it didn't have helium. So we are in discussions with the state on what is the optimum way of incorporating helium into the leases, because it obviously makes the best sense for Alaska to make sure that any resource of that value is produced as efficiently as possible, and it's not going to be possible to produce it other than in combination with the oil and associated gas. So there's probably not more that I can say until we've got to that point where we have a firm helium development proposition. Then that's the point at which we can then look at, does it rely upon waiting for LNG and using the residual gaseous residues from an LNG plant, or do we need to put some kind of straddle plant on the pipeline, or what is the most effective way of capturing that value?
David, can I just push back on that? It might be me that's just misunderstood. So you say it's gone back to a question of how the lease is written. We've obviously got oil and gas leases, and to me, helium's an inert gas. So you're saying that's in question?
A lease document in Alaska has a sentence that says, for the avoidance, I mean, I'm paraphrasing, but for the avoidance of doubt, helium isn't incorporated into this lease. So the rights to helium as we sit today are in limbo. Just as a matter of pragmatism, it makes most sense for us and for the state to incorporate it in some form. And so there's discussions about what is the best way of doing that in order to maximize the value of the helium resource, both to the state and to Pantheon.
Okay, thanks for clarifying. I mean, I was getting excited at the helium mention simply because, I think I read a report that NASA bought in quantity and it was approaching $1,000 per MMCF. So thanks for clarifying.
$1,000 per MCF.
Oh,
not
MCF.
Per,
Sorry, yes, but
$1
MCF.
million bucks per MMCF.
Yeah, which is astonishing.
But Flight, if I could add to that, the state of Alaska, of course, is the royalty holder over our acreage. So if we were to obtain the rights for that, benefit from obtaining a royalty over all of that production
as well. Yeah.
Can I ask one more question on helium? Sorry, it's my.
Apparently, it's not Sporadian show.
I've been quiet for most of the chat. It's about so helium. It's really hard to sort of contain, isn't it? It's just a question on the geology side of it, and maybe Alaska GFS you can pop in as well on this. But it's created by the fact that it's there's two zones. It's trapped between two radioactive zones, and that creates the either the maturity or the I can't even phrase the question. The sort of source rock and the maturity or the mantle, something's happening there. What can you just explain it? Because I just find it fascinating that suddenly, as an anomaly, we've got helium in one of our horizons.
Well, you need Sheldon Cooper to come and explain particle physics to you. But no, look, it's a process. If you wanted to try and make helium in the lab, what you'd do is you would bombard with protons and neutrons a hydrogen atom and hope that they stuck. That's what happens. How do you constrain helium? Because it's the smallest molecule in such, because it exists as helium rather than hydrogen is H2, and that's a bigger molecule than a single atom of helium. So it is often the case that a seal isn't a seal to helium, and you quite often find that where helium's being generated, helium is just sort of distributed through the whole column as it's migrating to surface and escaping. It happens that the seal above the Kodiak field appears to be constraining the helium, because we're seeing it both. There's helium concentrations in that shale, but also helium concentrations in the gas recovered from the liquids in the field itself.
So, in terms of processing it, would it be done locally at the field site, or because obviously 800-mile pipeline, if it can come to market, how do you conceal it across the scope of an 800-mile long?
How do you seal it in? Well, the answer is you want your gas line to be leak proof anyway, but as a general rule. But the truth is, most in terms of volume, most helium is recovered actually at LNG facilities, because once you've liquefied all the other gas, the only thing that's not liquefied is helium. So you end up with a more concentrated scheme. So there's a lot of production in Qatar. They're one of the biggest producers of helium, even though their concentration is very, very low compared to what we've measured in the Kodiak field. They're processing so much gas through LNG plants that the helium residue is economically recoverable. If, however, you got to a point at which the amount of gas that's not going to get to the LNG plant is large enough that you would rather remove the helium, you might put a straddle plant. There are pipelines in the United States where their major gas flow lines, and they've put a helium straddle plant where literally using membranes, they're separating out as much helium as they can. They'll never get it all, but they'll get a high percentage recovery. So,
thanks for that. Sporosy, go on. I think you've got one more question.
One more question. Yeah, one more question about Glenfarne. So the kind of Glenfarne news came out midweek and was, I think, confirmed by the AGDC. I wondered, have you met them yet? Have you been in any conversations, plans to meet them in the future?
Well, they're a participant in the project that we're participating in, so I'll allow you to draw your own conclusions on that front. What I'd tell you is that the founders of Glenfarne are exceptionally competent people who have understood the optionality associated with major infrastructure development and have a track record of extracting value beyond just the plain vanilla project by being prepared to take upfront risk. And I'm delighted to see a company of that caliber involved in the development plan and to be part of our team.
And they're Australian.
Okay.
Great. That's it. That's all my questions, Flight.
Okay, great. Robiso, is there anything you want to pick up on?
I mean, I think we got most of them there. I guess that there's a couple of small ones we can answer quickly. I guess there's one question about potential fast tracking of the EIS. I guess with Trump coming in and promising to cut through waves of legislation. So, any comments there?
I'm not sure that he promised to cut through waves of legislation. I think what he said was that if you've got a large investment project, the government is going to make sure that it is as efficient as possible in making sure that waiting on bureaucracy is not a reason for a project not to go forward. I mean, I think you've got to remember that President Trump is not necessarily trying to lay down chapter and verse in terms of the specifics of how things happen. What he's doing is making a statement of intent, and I'm personally, I totally agree with it. That if you, without ignoring any legal requirement, if you can avoid wasting time by over-interpreting bureaucracy, then that's got to be a good thing. One of the biggest costs that industry and investment in any country in the world experiences is the cost of delay. And I think what he laid down was a very serious statement of intent that we should not allow the bureaucracy to render investment potential uncommercial.
Okay, I think I've just lost my role as Trump's spokesperson in the future, to be honest. And the last one quickly, what will happen with volumes beyond those covered in the GSP, the gas volumes, I should say, and beyond?
We will look to sell them at whatever the market will bear, just as we will look to sell oil at whatever price the market will bear. The commitment on pricing in the GSPA relates to the volumes covered by that. Anything in excess is up for discussion.
Perfect.
Okay, thank you. Well, we've chatted around quite a lot of subjects there. Just closing comments, chaps. Just an open question, really. What are your hopes and fears in regard to both delivering Pantheon's strategy and wider market dynamics in 2025 and beyond?
My hopes, obviously, for good result at Megrez and obviously some continued positive development on Alaska LNG Phase 1, the gas line component, which will lead to funding, right? Because for us, it's all about capital. And my fear is really cost of capital. We've got to do everything we can to minimise dilution. We've been quite upfront about that. Look, if we can have sources of capital available sort of competing with each other, it drives down our cost of capital. So we've got to keep our eye on that and keep our eye on just minimising dilution. As I said before, we're in a really fortunate position that we've got 100% of everything here. So it gives us real scope, flexibility is probably a better word, to pursue funding from different sources. David?
And if we think in the context of the macro environment, there are some people think the oil price is going up, some people think it's going down, some people think it's staying the same. What we know for a fact is we can't control that. What we can control is focusing our capital resourcing into those areas that are going to be competitive as uses of investment. And the break-evens on the Ahpun and Kodiak developments are already very low, arguably in the $30 per barrel range, and a success at Megrez with the higher reservoir qualities that we've encountered would undoubtedly help underpin the resilience of the project. So that, and being so close to infrastructure, the optionality provides even greater resilience because you can ramp up and ramp down investment depending on what the macro environment looks like. We've got developments that require much less capital at risk than other developments in Alaska, and certainly than other developments in harsh environments, deep water offshore or wherever. And so we're extremely well positioned. And I would say, regardless of what the future brings in terms of the macro environment, it's the old story of the hikers and the bear. You know, you don't have to outrun the bear; you only have to outrun the other hikers. We are, in this instance, I'd like to think we're the bear, not the hikers.
Okay, yeah, guys, I've thoroughly enjoyed this evening in the chat. Well, thanks so much for coming on. We truly appreciate it. Thank you, David. Thank you, Justin.
Thank you, everyone.
Okay,
thanks.
Thank you,
guys.
Gent. Thank you.
Thank you from all the crew here at the Flight Deck, and hope to see you soon over at Flight's investment server, sharing industry insights for the good of all.